Okay, good evening, guys. So today I'm going to give you guys a breakdown analysis on a trade on synthetic indices posted on my Facebook page. And yeah, you guys should notice my name changed to Domitrans. All right, I will tell you guys the reason of that later on as we continue going. So yeah, I will tell you the reason why Domitrans exists. So I share the setup right here on CRASH1000, and you can actually see it's on the 1 hour time frame, right? So this is the analysis done, and I don't know if you can see the date right here. Nope. All right. So this is the setup, and this is it playing out right here, and currently we are still going higher. Right, so I will show you guys the markup right here, and after that we can now go to MetaTrader right here, and I will explain it right here also. So let's look at it right here. So this is it right here, the what is it called, CRASH1000, and the entry was right here on this one, or the other block. Possibly you can call it a demand zone either or the same thing. And I marked out the fair value gap right here, and let's go down to and then I placed my entry right here, and the profit target is on this buy step. All right, that is the profit target. So I'm going to give you guys a breakdown analysis, but then I want you guys to look at the chart and see if you can find the reasons to why this trade was done. Because I know most of us might be looking for sales entry, probably like marking this right here, and you think the price will continue to sell. But then I will give you guys a breakdown analysis, and I will explain everything like I always do from the beginning to the end why this setup played out. So I'm going to delete this stuff right here, and like I always say, the higher time frame is where you should start your analysis, because it gives you, like, it compresses all the charts and the candlesticks and makes it cleaner and clearer for you, and gives you a complete, very clean directional bias of where price has to go to, right? So on TradingView we have it on the 24-hour, but then we will still go to my daily MT5, and we go to higher time frames for the breakdown analysis. So right here, what I'm going to show you guys from the start is going to be something that might confuse you guys, but I think if you're having more experience and you're getting advanced with your analysis and in trading, and you always spend your time from morning to night on your chart like I always do, I think you could possibly get to that level, and we possibly understand the reasons to my approach analysis. So the first thing I did was to zoom out, and right here I know the market has been bearish, but then due to the way I understand my own structure, my own market structure, I am not seeing anything like a structure right here. All right, anything like a structure, I don't see them right here, because even you looking at this right here, you can see that this right here is the consolidation market, and it's really lower, and this is kind of like a choppy market. Now on the other hand, I know that most of us might be looking at this as a bullish structure, but me on the other hand, I'm seeing this as a complete price swing, like a markup to the upside. All right, then price distributed to the downside, and we now have the accumulation to the upside. So to avoid the confusion, all right, let me stop, and I'll still go to the weekly chart to explain it cleaner. All right, so my main focus on the structure was this external high. That is where I have the how will I say this, that is where we have a high that is majorly protected, that led to the cause of the price trading lower. All right, so that is my high, and the next thing I am focusing on is this low. All right, so the idea of what I'm trying to map out right here is to know the range high and range low that I have to deal with, and these are major highs and lows. All right, I call them external highs and external low, and I don't know what other traders call it. I think is what they refer to as the primary structure, or is it the secondary structure? I don't know. I refer them to major highs and lows, or the external highs and lows, because these are the key areas of buy stops that is external, sell stop is external, that led to the price swing. All right, so this right here, I mapped it out as my range high, and this right here is the range low. So that is the area in which I am dealing with, this high and this low. But then if I also have to mark my structure, long-term structure, because that is what I am. All right, let's say I love swinging trades, all right, to be honest with you. So my structures now is this high and this low. We have this high and this low. Now if the market has to go bearish, right, what I am supposed to be saying is lower high, lower low, lower high, and a lower low. But then it happens to be that we're having a failed swing low right here, and price is shifting bullish. All right, so remember what I said, that this right here, I am looking at, I am seeing it as just a single price leg. All right, a swing high, and I am seeing a swing low, and I'm expecting it to go higher, and now dealing inside the range highs and lows. So forgetting the past, I'm now looking at the current structure that I'm dealing with. I have this high and I have this low. That is the key areas that I'm dealing with. I have to watch out for. So if this resistance is printed right here, and we now trade lower to print support, I think the next thing that the algorithm will have to do is to print price for it to print a new high. So it's either it prints the new high by taking out this high and it now prints us that new high and trade lower, or it might fail to take that high. Maybe I'll stop at a fair value gap right here, or after taking this liquidity right here, then we can see if it wants to shift structure or if it wants to continue going high. We don't know yet till the market or the algorithm prints that for us. So after marking that structures, I am now looking out for where it has to be drawn to, which is this liquidity right here. All right, so now forgetting the long-term stuff like that, I'm now trying to break down to look for the setup that I could take that will be drawn to that area. So the internal structure, which are the primary structures that I'm looking at, is the current structure that we are having right here. So the structure I noticed right here was that we have this low that was broken, so we might currently refer that as a breakthrough structure, right? And our area of supply in which we'll be wanting to execute our sales will be here, right? So price traded into the area of supply. Now we could be profitable right here. We can make some good profit right here. Price is fractal, all right? So price is fractal indicates that price might reward you for some time and then it reverses backwards, all right? So price is fractal, all right? We are not certain of what it has to do. So it traded lower but did not break structure. It failed to, all right? It failed to break structure. So it, after the failure swing, it traded higher and violated that supply. So this tells me that supply is no more in control and demand has taken over. And then that gives me the understanding that price is now at a discounted area. So that means it needs to start buying, okay? It needs to start buying. So since that supply is violated, then that means demand is now in control. And we started printing a structure, higher high and higher low. Then the new high right here, the new low right here, but I don't like, sorry about the noise, have to silence my phone. Okay. All right, so then we have a new high. Remember, this is the daily time frame. We have the new high and we have this new low. So me having this new low tells me that, all right, I am expecting a new high, because on the lower time frame, if you're on the lower time frame, like if you did not start your analysis from the higher time frame to have a directional bias, you might be seeing some series of structural break on this week right here and this week right here. Now these are lower time frame structure, the internal structures, and this is something I've taught those on the mentorship. Okay, that we are not paying attention to internal structures to confirm a shoot of trend. All right, we are paying attention to the external highs and lows, and that external highs and lows shows us the confirmed shift of trend. All right, so if this market traded lower and did not break this low, this external low right here, then I am not confirming that this price wants to go bearish. So the supply, this supply resting right here is not something I'm looking at for sales. All right, so that is done. So now the other understanding about the market and what the algorithm does, I think I've said this on other videos where I said the algorithm does two things. I think I said that the algorithm is drawn to liquidity, like it prints liquidity and is drawn to take those liquidity. And the second thing that the algorithm does is to print imbalance and then go back to refill the imbalance. So we are balancing sell side inefficiency, or we're balancing this buy side inefficiency, right? So that is what I noticed right here, that we traded backwards. The price, the algorithm traded backwards, and when it traded backwards, it went to fill inefficiency. All right, so we have the sell side imbalance right here that it traded backwards into to fill up. All right, now when it filled our fair value, our sell side inefficiency, it tried to trade lower. All right, it tried to trade lower, but then it did not break structure, right? So after we have a failure swing low, the algorithm traded higher impulsively to break a structure right here. All right, so it now breaks an area of inefficiency. All right, it caused an area of inefficiency to be broken. So that means that to me, it means that we are not going lower. All right, because if we have to go lower, it would have used the inefficiency to go lower. All right, and after it trades that inefficiency, it will use that to go lower and then break a low, but it did not do that. So it quickly trade backwards and trade out of the inefficiency to trade to the upside, to trade bullish. All right, so that is how I do it. And then, because you have to understand the market, like whatever we have been taught in economics, in finance and accounting, I think economics, that is what we have to use in trading. We have to understand that, and that is the concept of supply and demand, which says that there should be an equilibrium between supply and demand. So that means that whenever we have inefficiency and we have the sell side inefficiency, that means that demand has to be traded into that sell side inefficiency to balance supply with demand. And when they are both balanced, then we will have to find another direction, and the direction is to be drawn to areas where we have pending orders, which are the pending sell orders or the pending buy orders, and that is our areas of stop loss. That is how the algorithm operates. That is what the market is all about. You are a trader, and trader means buying and selling. So if you are trying to sell, that means you're looking for those who are willing to buy, and that is the buy side liquidity pool we are having at an area of resistance. If we are willing to sell, if you are willing to buy, then we're looking for who is willing to sell, and that is an area of sell side liquidity. And the algorithm, that is what the algorithm does. It is being drawn to take those orders and balance the both areas, balance the sell side and balance the buy side, and we are now equal. All right, and then the price has to be drawn to another area, thereby printing new price. All right, because the price of a product cannot maintain a specific price. All right, it cannot be $1 forever. All right, when the demand has superseded, it will have to go into a new pricing. So that tells that whenever there's an increase in demand, then that means the price of that particular product will increase. study economics. I don't know if I be getting confused of what I'm trying to explain. But when you understand all of this stuff, you can easily use that to do your analysis on your chart. Okay. Now, when the sell side inefficiency has been violated, now my question is, what violated that imbalance? What violated that imbalance? And the reason of the violation is a demand, right? So that other block, that demand is resting right here. Now the other things you need to identify is that we have an order block, a bearish order block, and since we traded into sell side inefficiency, and if it is expected to trade lower, this order block right here, this bearish order block was supposed to be used to trade lower, right? But then the bearish order block got violated, so the supply is not valid, and we have a trade out of the inefficiency, right? So this is a 2 confirmation entry, which is this being a breaker block and a demand in line in confluence with that. Okay, so that is why I had my POI right here, because I know that we have traded out of sell side imbalance and we have balanced sell side, so demand is now in control, and what the algorithm was to be drawn to is an area of buy stop rising on this high. When you zoom out, you can actually see that this is bullish, right? And I was not paying attention to all of these structures. These are the things I showed you guys on the daily time frame, right? So my main focus is the higher time frame. Now we have to go down to the lower time frame. This is now the point we have to go down to the lower time frame to look for a refined entry or stuff like that. All right, so we slowly run down to 4 hour that refused to load, and yeah, so this is it on the 4 hour time frame. My attention was here, and if you pay attention, when price trade into the higher time frame sell side inefficiency, it traded higher, right? Then come back to fill in the buy side inefficiency. Now this buy side inefficiency was responsible to violate the sell side inefficiency, thereby printing a demand that is also responsible for that, and the demand has inefficiency of buy side, so we traded into it. But then we have to conduct liquidity assessment. All right, so the algorithm is very smart, and you have to understand how smart it is and how it operates to be able to have your own entry and risk wisely. So if you pay attention to what the algorithm did right here, when it was trading lower, it paused for a while, right? So when it paused for a while, what was it trying to do? It was trying to induce fishes right here, retail traders that trade support and resistance. So it induced them right there, right? So they are like, let's start buying, right? So now the algorithm has to print liquidity if it wants to buy at an area of order block. That is why I always teach that when you want to buy from an area of demand, or you want to sell, like if you want to buy from an area of demand, there should be someone who is willing to sell, right? I've explained this many times. So if there's someone willing to sell, then that means that is where the algorithm will have to buy from, below that stop level. All right, and since the institution understands this, and has a smart trader, you're looking for people that are trying to sell, and your order is below those pending sell orders, right? So that is the stop losses right there. So if the retail traders are right here, the algorithm has now engineered liquidity above the demand zone, right? So people will have their pending orders right here. People will have their orders right here. They will be on this trade with a stop loss below. So the algorithm will have to go and take those sell orders, and it starts to buy those sell orders, which is the stop loss. So the order block was printed there for a reason. The algorithm is very smart, and you need to be smart with the algorithm. So you have to understand how this works. Okay. So the liquidity was printed right there, and we have that hunt on liquidity, and then price traded high. Now, if it seems like the entry, depending on your equity, all right, depending on your equity, and you need to apply proper risk management, you could possibly wait for your confirmation entry. And for me, whenever I'm trading boom and crash, I do my analysis on 1 hour time frame, all right, because of the candlesticks are not the candlestick with no earth. So when the hunt occurred, we traded into the 1 hour order block, and if it was refined, it would be right here. All right, so we tap right there, and if I have to partially wait for a confirmation entry, that means I have to see an order block gets violated, and that is right here, the supply right here. Some traders thinking that this is a structure, and they be like they want to sell right here, without understanding that this right here is a support level, and we have liquidity graph and support level. I've explained this many times, and you can see the evidence right there many times. So it hunted, traded into order block, it bought, then violates the supply. Now if this demand needs to fail, this supply would have be the cause of it, all right, but it got violated impulsively. So we now have a structural break of supply being violated, and then we have our confirmation entry. Now what is the reason of why that supply is violated? We have a demand zone right here. So this demand zone, if you run down to the 30 minutes, you can see it very clean right there on your 30 minutes time frame. So let's wait for it to load on our 30 minutes time frame, and that is it right here. So this right here is for those that trade supply and demand, is referred to supply to demand flip. Yeah, supply to demand flip. So we have a confirmation entry right here. You can put your order right here, your stop loss below right here, and you have your entry, and you start riding. All right, so we have another supply that was violated because it did not break structure and traded higher, and price trade backwards to that supply zone, used it as a support level and a catalyst to be able to push higher, and now drawn to that area where we're having what? Our buy stop. That is our breakdown analysis. Now let's run down to our daily platform, and you will see it very clean and clear. Now let's go to our monthly time frame, and this is the monthly time frame right here on CRASH1000. So if we trading lower, we have this low, we have this high, and we have this swing low. If you pay attention to these candlesticks, you can see previous months took out this month low and have the swing low. You can see the pin bar at the middle and the two candles by the side, the left and right. I don't know how I explain this. The left and right, like we call that a swing low. This candlestick pattern, right? The candles look like this. All right, so most of the time something like this gave us a confirmation that we have a swing low. All right, the next candle we trade higher than the candlestick at the middle, so we refer to that as a swing low. All right, so the hunt on previous month low, and then this month opened and we start trading higher, we know that we are drawn to this high. Now if we go down to the weekly time frame to make everything clear, you can see that when the price was trading low on the weekly time frame, we have this lower low, we have this lower high, we have this lower low, we have this lower high. Now you pay attention, this lower high traded into fair value gap, so that inefficiency is going to be responsible to push the price lower, right? So as it pushes the price lower, now price retraces backwards and violates the fair value gap, right? So we violated the fair value gap, and finally we violated an area of supply, because if you pay attention, you notice that we have a reaction. There is a reason why price ratted right here. So this reaction was caused by a supply zone, right? So after that we have a structural break, giving us a change of character, and some traders looking at this as a supply zone, we see that as a break of structure right there. Right now, what is responsible? Well, is responsible to violate an area of imbalance. That is an area of demand. So demand has taken over supply. Where is our demand zone? We have our bullish order block right here, which is our demand zone. So like Run Trades on YouTube, also I used to follow the guy on YouTube, Run Trades. He used to say imbalance got rebalanced, like, you know, stuff like that. So this imbalance got rebalanced, right? So price put backwards, and since this inefficiency has been balanced, we got violated, so that demand will take over, and price is at a discount area, so a little bit of accumulation we have to occur. So long-term trades, that's all I do. So I think this is now going to be a position trade. So we have the demand responsible for that. So me, I choose this other block right here. Those are trade supply and demand correspond to this last candle or this one, but I'm taking this right here because it looks massive. All right, so that is it. All right, so price trades into it, and when price traded into it, that was where we had our daily time frame confirmation entry. All right, and the confirmation entry was that price violated this area of supply, giving us a break, taking liquidity, failed to break low and violated area of supply, and starts to trade higher. That is a very clean confirmation entry. Started from the daily time frame, which go lower to our lower time frame. And if I have to target liquidity, I'll just target right here. Or normally we only target this high because there could be a retracement after the algorithm has taken stops from this high. All right, so just target the high, and we are now satisfied, not greedy, and that is it, guys. So I hope you guys understand this. So you can subscribe, you like, you comment, and also you can go purchase my course on Udemy. It is at a very discounted price. All right, very cheap and available. So yeah, see you guys later on, and be safe.